In this week's look into the equities market, we're going to be looking at the metals and mining sector. Now, why are we looking at this? It's because Monday we had the release of the global sector PMIs, and what they indicated was that the metals and mining was actually seeing the worst output growth out of any of the global sectors tracked by Markit. Now, it's been the third month in a row where it's seen some pretty disappointing PMI readings in the global sector survey. And so what that ensured was that the sector was the second worst performing in the first quarter in terms of overall output growth. Now, output is the survey still indicated a 50.5 reading, which shows a modest growth in output. But when we look at the other sectors and globally, they're seeing a big increase, bit larger increases in output, which obviously fare better than the metals and mining. So with that in mind, we want to see what was investor sentiment in the sector. Now, if we look at overall ETF flows, they've been very strong for the quarter. They've grown about over $1 billion, and they're on track to beat last year's total of over $4 billion. Now, if we look at the overall monthly flows, we could see that they've seen 3 successive months of inflows over in January for funds that track the metals and mining sector. If we have to go back all the way to August of last year to see a month where investors actually pulled fund away from the sector. Now, the big funds in this sector, the big kind of asset class are gold and precious metals companies. So they provide us a good insight into seeing whether or not whether or not investors were focusing on large cap or small cap shares, and what was some of the allocations played there. And again, we've seen some more disparity within that sector. So what we found was investors were actually year to date, they've actually invested more into the miners, the gold miners sector, which are more volatile than the more established plays. So gold has rebounded a bit, and we've seen investors keen to maybe ride this kind of wave of volatility. But overall, it's pretty much been an across-the-board rise in precious metals tracking funds. Another interesting thing is if we look at the short interest in those names. So if we look at the miners' short interest, which are the smaller cap companies, they've seen a big rise in short interest in the last 18 months, whilst the majors have actually seen short covering. So we're seeing a bit of a disparity here. Again, as short sellers try to target the more volatile names in that space, whilst maybe the larger cap names are being favored in the recent rally in the metals prices. Because if we look at it, gold is still quite a bit ways off its highs that it was about a year ago. So that's it for now. Thank you very much, and see you next week.